Yo, what's up, YouTube? It's YT Wake 'em Up, back at it again with another video. This one is about the recession, a very important topic. Drop this in the comment right here below. How many people think we are currently in a recession right now? Or how many people think we're headed towards a recession in 2025? Right, because this has been a viral topic throughout the last few years. They're saying we're not in a recession, or we are in a recession, or we're on the verge of being in a recession. What do y'all think? Do y'all think we are currently in a recession? Because I feel like we are. I feel like we are right now. And I feel like we're going to start to see how bad it is in 2025. I feel like it'll get worse. The fact that everybody is talking about inflation, cost of living, crisis, these words are being thrown out there normally, regularly. It's rolling off the tongue fluently. So I feel like we're in a recession, man, not just for those facts, but just from the facts, logic, research. All of the numbers, in my opinion, show that we are in a recession if we're going to compare them to the last recessions. So if it was considered a recession back then, it's worse than then now. So I feel like we're in a recession. But you drop a comment below. Let me know what you think. If you are brand new to this channel, I need you to smash the subscribe button if you would like to see more of these videos pop up in your subscription box. And everybody that's watching, I need you to thumbs up this video so the algorithm can push this nice, amazing content that I put my time into out to new viewers. With that being said, y'all, let's get into this.
When I tell you that we are on the verge of a recession, the other day I thought that I would do DoorDash to make some extra money. And when I tell you there was no orders coming in, I literally sat there for hours and maybe one order would come in every hour and it would always be a low pay order. Mind you, in 2020, I was in grad school and I literally lived off of DoorDash. I paid my bills with DoorDash, everything with DoorDash. And I would decline orders after orders because I knew a higher pay order would come in right afterwards. But people literally are not ordering DoorDash. People cannot afford to order DoorDash in this economy. So the next day I was like, okay, bet I'll try Uber Eats. And it was the same thing. And I just saw the other day an article about how McDonald's is having trouble making sales right now because people can't afford to buy their meals anymore. Yep. And they came out with a value meal for $5, but they're like, we can't keep selling this because we're just not gonna make enough profit off of it. The cost of housing has skyrocketed. We are going somewhere that I'm very, very afraid of.
Oh yeah, y'all. DoorDash, Uber Eats, Grubhub, all of that's burnt out right now. If you want to make some money, you probably have a better chance doing Instacart because groceries can last people longer, but it's still gonna be people that order on there, but not as regularly as people ordering out for takeout. Because we know that people got to start cooking at home now. All that eating out, that's a no-go these days. But another thing too, those apps are oversaturated now for the fact that a lot of people are unemployed. A lot of people can't get jobs. It's been years on end without them getting a good job or getting a job in general. No cause, no nothing. So a lot of people had to pick up gig work. So DoorDash, Instacart, Grubhub, Uber Eats, all of those were the easiest to get into, right? And it paid good, but it's not looking like it's really paying good no more. And I tried it out for myself. The pay was terrible. Made $80 in the whole day, doing it all day. Me and my girl, we did it all day and we made $80, man. The next day we made $60. We would literally sit at the restaurant and wait for orders to come through. And like she said, it's not many orders really coming through, man. But now I can see these apps struggling, man. We might even hear about some of them becoming non-existent in the future.
Came across this article and I wanted to share it here with you guys. So it says that a recession in early 2025 could potentially send the stock market tumbling by 30%, according to strategists. And so what does this mean for you? Well, if you have your money inside of the market, meaning 401k, 403b if you're a teacher or a nurse, TSP, 457, traditional IRAs, Roth IRAs, any of those people, I'm talking to you. Because most people that I talk to, they don't even know that their 401k is in the stock market. I'm here to tell you it absolutely is. And you subject yourself to the risk and the downturns of the market going down. So just imagine in this example, you have $100,000 sitting inside of your Roth IRA. because a lot of people like Roth IRAs, right? And so if this becomes true, that $100,000 will be reduced by $30,000 because you had your money exposed in the stock market.
Now, this is one thing I try to tell people. That's why I tell people check their 401ks, especially in economic downturns like what's going on right now. And it's more than likely that you have less than you really thought you did. This video came out from July. After this, we're going to get into what just happened in the stock market this past week, maybe about a week and a half ago.
So depending on your risk tolerance, depending on how much money you have to lose, 30% may not seem like a lot to you. But for the average American who is banking on their 401k, their Roth, their IRA to get them through into retirement, a 30% loss will be detrimental to their future self. And so if you find yourself in this position where you could potentially face a 30% loss or more, who knows, inside of your retirement accounts, your stocks, your 401ks, all of those things, you have to ask yourself, would you want to do something about it if you knew about it early, sooner? And if the answer is yes, then I have a solution for you where A, your principal is protected, meaning the money that you put into it can never go down. The only way it can go is up. It actually will pay you out an income for life. So every single month you will receive a paycheck. No matter what the market does, they are guaranteed to pay you out every single month. You are able to leave a legacy for your family. So when people have their money inside of the stocks and things of that nature, there is no death benefit attached to that. You can only find that inside of life insurance. And then the other thing that's very important to factor in, especially when you get older, is your health changing. So with this particular account that I'm talking about, there is a long-term care rider on there that is going to help you if your health ever changes sometime in the future. And so if you are about to retire or you are already retired and you do not want your money to potentially be lost to the market, then we need to have a conversation like yesterday, because nobody knows what the market is going to do. And it especially acts crazy when it's around election time. So you want to be proactive with your money. Let's have a conversation. Reach out to me. Comment any questions that you may have. This gives me more intel and more content to put out for you guys that's helpful, because all I want to do is help my people retire happy and retire healthy.
At least she didn't have nothing to say, or I thought she was. But yeah, man, that's the thing. A lot of people don't know what they're really invested into. They just know it's a 401k plan. They don't really have an idea. They just know their employer asked them to sign up for it. And that's really crazy, man. That's crazy that people don't really care about their finances like that. And even if you tell somebody to check their 401k, they won't really want to do it. Like, they don't really want to know what's going on inside of their retirement plan, essentially, since this is a part of it. But like I said, this video is from last month, July, at the time of creating this video. If y'all continue watching, y'all gonna see what just happened in the markets about a week and a half ago with the stock market. So she said 30%. We're gonna show y'all what just happened about literally a week and a half ago. But did you know, if you do got a 401k, man, you could actually transfer your 401k over into things like real estate, gold, silver. You don't got to take it out. You could transfer it over into things that will go up in value. Gold, silver, it's at an all-time high right now. That's one of the greatest things you should be investing in, because it protects your wealth. Gold is speculated to reach all-time highs, as well as silver has already made all-time highs. Gold too. I mean, gold hitting it out the park too, but I'm talking about long-term. We talking about buku money. We talking about life-changing numbers in a minute, depending on how much you got. But
if you live on planet Earth, this is going to be a very important video for you to understand. This is the volatility index. This gauges how risky the economy is and how much of a potential there is for collapse. It's up 122% in the last day and a half. It's above levels we haven't seen since COVID. Right here, this is 2020 when we found out COVID was happening and the economy was going to be just completely shut down. Now it just spiked to 52. This is a massive indicator. This tells the world that we are on the brink of a collapse and the global economies are crashing right now. Japan's stock market's down 12%. Europe's is down massively. The futures market for the United States is down massively. And we go even further with this. This is the chart going back about 20 years. If you look, this was COVID. This is where we are today. This was the 2008 financial collapse. This was the housing market crash, that one that everybody talks about how horrible, the worst ever. It wasn't even that which was COVID and was right now. That tells you the brink of what's about to happen. Do you remember COVID? This is right up there above the COVID, but below the financial collapse of 2008. This was the tech bubble. This indicated all of these major things. So buckle up. It's about to get a little wild here in the United States and across the globe.
There you have it. That's what I was talking about, man. Y'all see, we are on the brink of collapse, a straight collapse of the whole economic infrastructure that we once believed in. It's on the verge of financial calamity. And numbers are higher than they were in '08, higher than they were during the pandemic. But they just want to keep kicking the can down the road, so this will be the worst one yet. Once collapse happens, violence increases. We already seen signs of blackouts, right? So we know the blackouts will merge us into the new digital economy. That's what will happen. But before then, it'll be collapse of all markets across all sectors, right? Mass layoffs. A lot of people losing their jobs. We are headed down a path of new beginnings, really. We're headed into the fourth industrial revolution. This will be way bigger than any collapse we've ever seen before.
It is officially time for a recession in the United States. So the SOM rule, which officially predicts when a recession is going to be triggered, has officially signaled the start of a recession. And the news of this spread really fast, impacting the markets almost immediately. We can see that the S&P 500 was immediately impacted by this news that just dropped a couple of hours ago.
Look, y'all, that's about a week and a half ago. That's what I was talking about.
Dropping 2% and losing $112 in value. Also, at the same time, stocks lost $2.9 trillion because of the fears that this is going to be a global recession. So we've been talking about a recession for 2 or 3 years on this page, and it seems like we're at that point now where it's here and it's about to get ugly.
Y'all, people said global recession. The whole globe. '08 was the United States of America. So like I said, this is going to be the biggest one. Global, man. Global. And fears have begun kicking in. Stocks are tumbling. Stock market is crashing. This is what's been happening too. The stock market has been crashing. The Federal Reserve has been inflating the markets. They've been printing more money and inflating the markets with their fake dollars for real. We call them fake dollars because it's the Federal Reserve money. They print the money. They're in control of the money supply. They can print as much as they need. So they've been inflating the markets to make it seem like the economy is doing good, like it's thriving. But in actuality, it hasn't been for a good while now. But, you know, around election time, they got to make it seem like the numbers is up. But after the election, watch how this play out. Because, you know, new president comes, new challenges that they have to tackle every time, if you haven't been paying attention.
$2.9 trillion wiped out from the stock market today. This is the worst single day in the stock market since March 16, 2020, when stocks plummeted in reaction to fears due to the COVID-19 pandemic, leading many to speculate that this is a precursor to a global recession. Now here's the hook. With $2.9 trillion now being moved into cash positions, the question is when and where will that cash move back into the markets? If you haven't been paying attention to Bitcoin, you don't know what it is, you don't understand it, you just think that it is a digital currency, then make sure that you follow, because this is my subject matter to explain why Bitcoin is now on the books of the greatest and most massive investors in the world, including Larry Fink, Jamie Dimon, and even Robert F. Kennedy recently stating that more than half of his personal wealth is now in Bitcoin. Why? Why is Donald Trump signaling that he intends to move Bitcoin onto the U.S. Treasury's books as a national reserve asset? Why is Kamala Harris hosting a diversity and DeFi summit? I don't blame anybody for being skeptical of crypto and cryptocurrency, because most of the people that are selling and explaining it are super sketchy. But if you really want to understand what the big deal is about this technology and where it's going, make sure that you follow and drop a comment.
Why? Well, just like Coach JV say, shout out to him. First they sue it, then they regulate it, then they join it, right? And that's what's going on right now. So we're headed, like I said before, we're headed to a digital world, which will be ran on blockchain technology. The digital dollar the CBDC, which they don't want to call it CBDC. They're going to call it the Fed coin or whatever they're going to call it. They're going to brand it as a new type of coin, right? They're going to brand it as the digital version of the US dollar. That will be based on blockchain technology, DeFi, right? Now, the CBDCs, they are centralized. Cryptocurrency is decentralized. There's no central entity that is in control of it. CBDCs are controlled still by central entities. I could break this down further in the future moving forward in a more in-depth approach. But the reason why they're so heavily invested into cryptocurrency right now is because the new financial industry will be ran on it. It's already set up and set in stone. And I'm not going to give my play out on here on YouTube for free. But I've been invested into the next coin that will run the financial industry. It's going to control the CBDCs, and it's a cryptocurrency within itself. If you know what I'm talking about, you know what I'm talking about. I'm not going to give this out. But for those that know me personally, y'all know what's going on. Or those that do their research, y'all know what I'm talking about. But that's why. To answer his why, that's why. So first, we have to get this crash so we can go from the current financial system to the new financial system. We have to have a crash first. And cyber attacks, blackouts, all of that will happen in between that. So what we've been seeing so far, that was just a precursor. That was just the test run for the big collapse. I'm going to just say that.
Dealing for the first time in our lifetimes with a world that is actively de-dollarizing. As you mentioned, on the back of that, central bank demand for gold is at all-time highs for the last 2.25 years.
Yes, sir.
Right? All of these things, rising demand, global instability, global inflation, an adjustment potentially longer term of global reserve currency status. All of these things tie into a rough time for the US dollar, but a very good time for gold and silver. So, I encourage everyone out there to get the information, understand why precious metals are so important in this climate. And I think all we have to do is follow the smart money, look at what central banks, look at what institutions are doing. They're moving into precious metals at a rate never seen before in history, and it is a reflection of the current economic times.
Follow the money. Like Grant Cardone always says, follow the money. You got to follow what the banks are doing, follow what the institutions are doing, and you will know what moves to make. So I just wanted to drop some more facts and logic about how gold and silver, precious metals are in demand right now and why that's a safe investment. We got BRICS right now. We got de-dollarization going on. This is another factor. If anybody is watching from Australia, if you are looking to purchase, and this ain't no sponsorship or nothing. This is just me giving y'all my plug. If you from Australia, then I got a plug for you to where you can get great prices on high quality, high value gold and silver. As good as gold, Australia. Shout out to my plug. Shout out to my connection. Shout out to my boy Andre in Australia for that. As good as gold, Australia. Y'all can pull it up. Y'all can find it. And I'm working on getting one for America as well.
The U.S. is officially in recession, according to 2 economic indicators that have virtually never been wrong. One of these indicators is the growth in unemployed people year over year. There are 14.5% more people unemployed this year than there were last year. That is huge. All 11 previous times that this has happened, we have entered a recession. And there's another tried and true indicator that has also gone into recession territory.
All right, so 11 times that the unemployment rate was actually lower than it is right now, we entered into recession. So you see how, like I said, they want to make this be the biggest one ever because they don't want to really call it a recession right now. They don't want to say that we're in recession, even though we are by the statistics.
It looks like when the 3-month moving average of the unemployment rate rises more than 0.5% above its 12-month low. With the most recent job report, that has occurred, and this indicator has not been wrong for the past 9 recessions. Remember, not only have these 2 indicators been perfect predictors of recessions for the past 11 and 9 recessions respectively, but they are also what's known as lagging indicators. Lagging indicator basically just means that the indicator goes into telltale territory after the economy is already bad. So that means that these 2 indicators would say that we are already in recession. The job market overall has slowed significantly, with only 8.1 million positions open in June. That's compared to 12.1 million positions, 4 million more, in March of 2022. Of course, there are more indicators other than just employment numbers that are showing that we are in recession, like the ISM Manufacturing Index, for example. That fell further this week, signaling that manufacturing activity is slowing down.
Right, like he said. So basically, these numbers go off of how many job openings have entered the economy. But like we know, even though the numbers are down right now, those numbers aren't even accurate because we have ghost jobs being posted to where they're not calling people back. They're not really even looking to hire. So they're just doing this to make the economy look like it's in a good position, like it's not as bad as it is. So those numbers, I feel like not even accurate for real. It's actually worse than they're putting out to us. We know how the media do, man. We already know about the fake media. They don't give us the real numbers. How do you feel, man? Do y'all think we are officially in a recession? Do y'all feel like we've been in a recession already? Or do y'all feel like we're going to be in one in 2025? Or do you just feel like, nah, everything going to be all right? Ain't no recession coming. Everything all good. We ain't got nothing to worry about. Drop a comment below. Let me know what y'all think, man. I want to thank y'all for watching. If you made it to the end of this video, comment recession proof. Because we're going to survive this. We're going to make it through. With that said, though, it's YT Wake 'em Up. Peace.